And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to Coach's Playbook for Tuesday, October 11th. We're light today. Hogue and Dan are out of town, so I'm joined today by Mick and JD. Mick, how are you doing this fine day we have here?
Bright-eyed and bushy-tailed. How are you, Jack?
I'm good. I'm excited that we're about to talk about self-assessment questions to ask. We're getting towards the end of the year, a time of reflection, a time of pondering. So we'll get to all that. But my understanding is you have a trader shout out first.
Got a couple trader shout outs. So big shout out to Zachary Shaggy, up $8,200 in the NASDAQ right now. And then big shout out, another large day today, Fu Wei Du, up $7,300 trading the NASDAQ.
Well, good on both of them. Been a lot of
Yes.
action in the NASDAQ, that is for sure. Yesterday was a bank holiday, not a holiday in the futures market. A lot of stuff still going on. So let's get to our assessments. So we'll kind of go in a circle here. JD, welcome. Always a pleasure to have you. When you're kind of assessing your progress or your performance, whether it's for the day or for the year, what are a couple questions that you find helpful, especially questions that if you can just give an honest answer to? I think you have to be honest with yourself too.
Sure, 100%. I was reading through that blog article that you shared, 7 questions for your personal trading self-assessment. And the first one on there really popped out at me, which was,
I want to talk about this one for a bit. So let's do it.
Do you even enjoy trading? Like they say, if you love what you do, you never work a day in your life, right? But if you don't like what you do, there's really no incentive to work hard at it. You'll never take the time to continue developing your skills and getting better if you're not getting joy out of it, especially on days when you're not making money and not enjoying yourself. It can force bad trading behavior. Pretty much.
I think it's a question that I feel that people in trading or anything else we're doing do not ask enough. It's easy to get into a routine of this is just something you do and not ask, do I even like this anymore? I have some anecdotes, but I'll let Mick jump in first on this.
Yeah, so I mean, the self-assessment of your trading is huge, and it's really what's going to take you from one point to another point, and progressing in your journey. So self-assessment's really huge. As far as do you enjoy trading? Trading should be fun. And if your outcomes from your trading are not giving you any fun, you need to think about what you're doing. I can tell you both that I've gone through some periods of time where trading hasn't been fun for me. It's been difficult to get out of bed in the morning. And that's when my strategies have not been working in the market, and you come to work and you lose money and you lose money and you lose money. And, that's not what you're here for. We want to preserve capital first and find opportunities to make money. So if you're not enjoying yourself, it's really time to take a step back. And during those times, after I found myself having a hard time getting out of bed to turn on the computer, I was not enjoying it. I took some time off, decent amount of time. I'm not talking days, weeks, I'm talking months. Find some other things to keep your mind occupied and, bring some income in. And then, I've always come back to trading with a fresh mindset and a new outlook that's optimistic. If you don't have an optimistic outlook when you sit down in front of your computer every day, if you're not enjoying yourself, it is the best indicator you could have to take a step back and reassess things.
Even not in just like a lifestyle hippy dippy thing, as in, don't do what you don't enjoy or don't do things to make you miserable. I understand that because of responsibilities people have, there's occasionally things in life that you're going to need to do just to do them. And that's a lot of people's jobs, unfortunately. The truth is, though, in that case, trading is not like those sorts of jobs. If you're not enjoying it, it's not like, well, I'm going to grit through and, just keep this up for the good of, my income and family. It's like, no, you're going to do the opposite, right? You're not going to trade well if you're not, if you hate it. And, it applies, as I said, to everything people do. My, wife is a stage performer. I know people who are musicians, things like that, things that you think people want to do, but there's people in that just hate it. And at a certain point, you're just like, well, then do something else.
I've noticed with myself, and I've heard this from other people too, that when you're not enjoying it, you can tend to abuse your account. I've seen it in myself when I'm on a bad streak, and you just say, what, F it, what's another $1,000? F it, I'm gonna short this market as it's going up, and then it snowballs. It leads to more discontentment with what you're doing. So it's really important to catch that emotion and do something about it ASAP.
Yeah, JD, I'll kick it over to you, but first, what you described there, Mick, I forgot about that. Is we've talked a lot about the idea of like revenge trading, but even worse than revenge trading is like straight up like nihilism trading, like. I've seen it done before. Like you said, just like F it, whatever. Like you go into that mentality where it's like, well, I'm going to lose it all or it's going to work out and I don't care anymore. Well, if you don't care, then like, what are you doing?
If you're not enjoying yourself, you're not going to care as much. And that can really put people in, career changing situations.
Yeah. I don't think you'll ever give yourself a fair, honest self-assessment either if your heart's really just not in it. If you don't care, what's the point,
Yeah. So let's move on down the list. I think that's the most important question. We'll bring up some other questions that you can ask yourself and think about, but I think the one that people most need to ask and be honest with themselves is, do you enjoy it? And I can say that like when I stopped trading professionally, it became very clear to me that I was like, no, I do not enjoy this. So that is what happens. From the blog, because I think it lays it out nicely, but like, what do you think about this question? Is more so, I think people are very rightly so hung up on their P&L because at the end of the day, that's kind of the measure of success, right? But from the blog, they asked the question, like, what is your P&L saying to you? And I think there are ways to dive in there deeper. And I'll throw it to you first, JD, sometimes. What are you looking at? Like, and you can take it outside of P&L and just, let's say, like, what is your trade report saying to you?
Well, first of all, I mean, if you're newer to the game, we preach a lot about trusting the process over profits when you're just getting started. So there are some other questions I think that could tie into this very well, like are you following your rules? How are you feeling while you had trades on? Are you sticking to your trading plan? All those have an effect on your ultimate bottom line. So I think just looking at, the dollar amount isn't saying a whole lot about your actual trading, yeah, if you're up money, some people can, shoot from the hip, get lucky, make a little money, but it's just not sustainable. So I think the real questions are, how did you perform throughout the day, throughout the week, throughout the month? And that's really the ultimate question when you're trying to determine what's affecting your P&L. Those are the types of questions you need to ask, I feel.
That's a good point, because P&L is really just a manifestation of size. It just scales. And there comes a point at which you start, you could theoretically be trading a size that makes things much harder to do. That is not retail traders. But far more important than the P&L is any information you can gather about the efficiency of your capital utilization, right? What things like, what was your return on your risk capital, and how much heat, so to speak, did you take to do that? I mean, somebody that takes 10 grand and turns it into 15 grand with like not taking huge swings and trading just a few contracts, that's a much better trader than someone that, takes it from 100 grand to 125, just doing all sorts of nonsense. Right. So really, beyond your drawdowns, whatever else, think a lot about like, how efficiently am I using the capital? Because that will scale and your P&L will go with it. So that's what I think about when I look at a trade report. I can have an up day that I'd say like, well, I did not trade well because I made too little and took too much heat for the amount of risk I had on, as measured by, the margin on the contracts or what have you. What about you, Mick?
Yeah, I'm smiling as you're talking about return on margin. I remember years ago when I was taking the Series 3 exam, a lot of those questions were not about return on your account, but it was return on the margin that you were posting. So that's something to consider too. Keeps things relative to your size. What P&L says to me, and this is very clear to me, it's my P&L is telling me if my strategy is working or not working in the current market environment. And when I say P&L, I don't want to look at just my day's P&L. I could have a good day or I could have a bad day. It's a small little snapshot into the week. Every week's five sessions. So I like to see what is my P&L for the week over 5 trading days. If I do trade those 5 days, I think it's more important to look at your weekly P&L to gauge that, because you will have up days, down days, but over the course of 5 sessions, you should be up. I mean, I think our goals as traders is to find good opportunities. We will have trades where we have bad timing, we get shaken out of stuff. We were just flat out wrong. But over 5 sessions, you should be able to look at your account. And, the goal of trading 5 sessions in this week is to have more money in your account at the end of this week than you did at the end of last week. So I think it just, simply put, it's telling you if your strategy is working or not.
And as far as evaluating, so we started with sort of the psychology. Now we're moving to the strategy. And I think that's probably the second most important question beyond do you enjoy it is my strategy working? And by really dissecting your P&L report it's important to keep track of your days and the stats there over time. But you get a larger sample size if you're just trading outright futures, like bring it down to the trade level, get your trade by trade statistics and what's working. And you want to monitor that over time. So how you see if your strategy is working is just like over time, what is changing? How is my win rate changing with the strategy? And how is my return profile changing over time? And if those start changing in a negative way, it could just be variance at first, but if it's something that is consistent, like from what that timeline is, will look different for different people. In statistics, 30 observations or something, you can get roughly like normal distribution. So maybe over 30 trades. But the problem is that the market's always changing. So that's another external variable. So you can't quite do that. But you need to monitor those stats over time. And if they're changing, think why? Because if you're getting stopped out too often, but the trade is working otherwise, do I need to widen out my stop, cut my size, and widen out my profit target? Or maybe it's the opposite. I don't know. You'll have to look at your trades to do it, and only you can really do that.
Very important stuff to look at.
Okay, so another question is more purely, we've gone from like psychology to strategy to like, I think goal setting in some ways is interesting. I think we talked about this. I can't remember if this was on Playbook or the podcast last week about being honest with yourself and doing realistic goal setting. Because I was mentioning, I'm sorry if I'm repeating for anyone out there, that like at the beginning of every year, I would be like, this is the year, and I'd have some number in my head that was going to be exceedingly difficult for me to reach. Like looking back, I know that it was probably like a 95th percentile outcome of like what the possible outcomes were for the year. And then I would get kind of down on myself when by, February or March, it was becoming like, well, this is increasingly not possible. So I think when you look at your P&L statements, you got to use it to realistically kind of think about what your goals are in the coming month, quarter, year. So I'll toss it to you, JD. What about that? Like, what are your feelings on sort of like goal setting?
Yeah, I think that's an important point. Keeping the goals reasonable, is it possible to double a $5,000 account? Yeah, sure. If you start swinging for the fences immediately, trying to double it in the first month, you're probably going to be in for a rude awakening. So you have to kind of ground yourself there. I would say, I don't think I've ever, maybe once or twice, I've ever hit a financial goal that I've set P&L wise in my trading account. It's just difficult to follow the money like that. But I would say reasonable goals to set for yourself would be, first of all, sticking with your trading plan like you did, and then ask yourself those honest questions. Did I do everything I said I was going to do? I think that's a great part of setting goals, doing what you say you're going to do every single day, day in, day out. Make the appropriate changes when you need to, and then ask yourself, after you made those changes, did I do it the right way? What else could I do differently? I think that's probably a giant factor in goal setting is making sure you're staying consistent.
Mm-hmm. I have a slightly different way to phrase this for Mick, because I think another sort of like the final, I think this is probably, we'll talk about this for a bit, so we'll go out on it. I think it's important to, when you're looking at your P&L for some period, honestly assess like, what are my strengths and what are my weaknesses? And I think there's interesting things you could do with that as far as trading, because unlike a lot of things, like say you're in the NBA, right? If you're a 10% free throw shooter, people are just going to follow you all the time. So like you need to address that weakness. Trading is not always like that, where certain weaknesses you can just choose not to do. You know what I'm saying? Like I would almost say it's usually better to like figure out what your strengths are and just continue to try and develop that. And then your weaknesses, unless they're just like fatal flaws, like I never set stops, or like I always trade 5 times the size I should, those you'll need to change. But if one of them's like, this was me for a while, like when I was trading treasury bonds, is like an easy weakness for me is I would get bored during the day and trade like ES and lose money on it. It's just like, okay, it's a weakness of mine. Don't do it. It's
Right.
that simple, right? What do you think about, like, what are some strengths and weaknesses for you, Mick? Or like, what are some things you think could get rid of?
So I've developed the strategy and the trades that I take now have basically been formulated through learnings from losses. So I never said, this sounds like a good strategy that I'm going to use, and then it just goes from there. It's like, okay, this didn't work, that didn't work, that didn't work, that didn't work. So I have all these things that I don't do anymore, and that kind of really narrowed things up to what I could do. So strengths, I think I have a few strengths. I take very few trades. I'm really selective with those trades. A weakness that kind of led me to a strength is, one of my strengths is adding to winners. When it's working, adding to winners is something that I'm very good at. A weakness that produced that strength was going in with a decent initial position and then getting shaken out of that trade. Not all the time would it turn around and I'd be right, but it always pained me to have the right idea, but have a little bit too much on where I get shaken out and then it goes in my favor. So because that had happened a few times, I came to one of my strengths that I think is one of my best strengths, is that's adding to winners. So I start small. As the market continues in my favor, odds are on my side. I deserve it. I deserve to, add leverage to that winning position. So that's something I've, been good at. I think probably my best strength though has been making mistakes, but then learning from those mistakes. I'm really good about recognizing that didn't work because, I take this very seriously. I don't like throwing spaghetti at the wall and seeing if it sticks. I when something goes wrong, it really bothers me, and that helps me remember it and not replicate it in the future. So I've been really good about learning from my mistakes. It's probably the thing that's helped me the best. I want to go back to talking about, we were talking about goals setting and stuff like that.
Mhm.
You got to have goals. One thing that, when I started trading, we were in, I was doing mostly grains and stuff like that. And for periods of time on and off over the years, grains have been, they've had boring moves, they've had, wild moves and stuff like that. But I think to say, I want to make X amount, trading a market when you don't know if the market's going to really move, I think about corn, pretty narrow ranges and stuff like that. For periods of time, there hasn't been a ton of volatility. So what I'd like to do is kind of compartmentalize these goals where if I have a higher time frame opinion on a certain market, let's say, crude oil is gonna, I think it could potentially rally to something. I start off by saying like, okay, if it does what I think it may do over the next month or so, there's a chance that I could make X amount of money. Then I investigate that idea and think about the profit potential. And I start thinking about what goals do I need to set in order to, profit X from a move like that. And very rarely do I ever reach that, monetary goal, but I know if I'm focusing on that, I will be, assuming the correct amount of risk in order to at least reach a pretty good percentage of what I'm thinking I could make on that trade.
Yeah. I mean, that's when I know this is neither here nor there, but that's why I have to scale out of positions like that, because I could never do all or nothing where I feel like such a loser if, I have some grand, huge profit target and then it gets close and then comes back.
I'm with you. To that point, Jack, it's very rare that traders buy the low and sell the high. Maybe you get that once a year or something like that. And that's why I like scaling too. I don't need to time everything perfect to, play a trade very well. So, taking risk off the table while I'm taking profits is great. I might, cover a short or something like that, keep a little bit on, and then, you get the windfall profits on the next day when it goes flying down. And I'm okay with that because I know it's not do or die at that very moment where I may need to cover the trade or something. And then, to your point, I said one of my strengths is adding to winners. If I'm not always going to buy the low tick, so as long as it's going in my favor, I don't need to worry about buying the low tick with a bunch of contracts or a bunch of leverage.
Yeah, good, well put, as they say. So before we end this here, as I said, the big takeaways. When you're looking at your self-assessment, part one, do you enjoy it? If not, do something else with your life. Part two, strategies. Part three, honest assessment of your goals, strengths, and weaknesses. So unless you have something to add to that, JD, I think you can quote us out. We made it, just the three of us.
We did.
Amazing feat.
Great job, everyone.
Yeah.
And I pulled up a quote. So Sun Tzu said, if you know the enemy and yourself, you need not fear the result of 100 battles. I thought that was fitting for this topic. Because preparation is the key to success, right? And
that's Sun Tzu. He was in Statistics 101. That is definite.
Well, that's that book by Sun Tzu, The Art of War. That's one that I purchased, and it's been sitting on my bookshelf for quite some time. I haven't picked it up and read it.
There's a lot of great quotes in it, and I think a lot of great learnings. But also, it reminds me of the film Scarface, not that they're the same, in that if someone's favorite book is The Art of War or their favorite movie is Scarface, you gotta watch out for that one. That's a strange dude, because frankly, it's definitely a dude. So that's all I got for this week. I'll be back next week, maybe with Dan or Hogue or both. In the meantime, stay safe in these markets. It's volatile out there, a lot going on, but know thyself and you will prosper. I'm trying to do Hogue here. So pray for peace. Stay well. We'll see you next week.